Hello, it's Anthony Meisner at Land Title. Wanted to bring you the Boulder County market update for the month. We have a bunch of interesting stuff going on, and as suspected, it is going to be an interesting ride going into 2022. So here you can see with our attached, detached, combined slide for all of our inventory. Inventory is really down, and we're actually getting to the point where we're lower than we were in the springtime during our really competitive market. Now, there's a lot of reasons that this is happening, but it's creating some incredible opportunities for sellers, but it is putting the pressure on those buyers. So if you're working with buyers or you are kind of ramping up for that season, this could still be an amazing time to do that before there's too much pressure. So you can see year over year, we've experienced an average sales price increase of 24% across Boulder County. It's way more than we would have ever expected. I've been saying 10 to 20% the whole year, and we're definitely pushing past that point even because inventory is just so low and there's so much buyer activity still. And I'll really show you what that looks like getting in here. So if we get over to where we just look at the supply, you can really see where most of the inventory is sitting. The vast majority of the inventory in the entire county is in the city of Boulder. And a lot of that is just due to price point. So with that elevated price point that the city of Boulder carries, there's a lot more barriers to entry. When you look at a market like Longmont that has 50 active units at the end of November compared to Boulder's 125, those markets are pretty similar in size. So it really shows you just how much more competitive it is out there in Boulder County than in the city. But the city is less than a month of inventory, and we'll take a look at that. But big takeaways here are just the fact that with this type of inventory starting the year off, where we ate away at our inventory all year in 2020, the little inventory that we had, we're going to be really off to the races, and this is going to be a super tight inventory market into 2022 with major price appreciation. As long as those interest rates stay low, which it looks like as they trickle up, it will be slowly. So we have a couple of things to really consider here. Month supply of inventory is only at a half a month. We're at 0.5. Now, a balanced market is 4 to 6 months. And if you look at some of these submarkets like Louisville or Lafayette or Longmont or Erie, we're even less than the average there. We're talking about 1 to 2 weeks of inventory in one of the slowest times of the year most of the time. So with inventory so low, this is really going to affect upcoming year. This is going to affect the month of December. It's going to affect everything going into the spring because there just isn't anything on the market for buyers to look at. As we talk to clients and see what's going on, we're really starting to see a lot of people still talking about bidding wars here in December. And that is going to really put the pressure on the entire market. So if we look over at kind of days on market, this tells us more about our buyer behavior. Well, this usually is like a horseshoe and it skyrockets up towards the end of the year because you just don't have very many buyers still looking. The problem is that these buyers that couldn't buy earlier on in the year, they've really been forced to look and look and look until they can find something. So one of the most important things to remember here is buyer behavior is super bullish still, even though there's no inventory. So these days on market are staying really low. And then you have places like, Longmont and Erie. Well, Erie specifically, are basically active to sold in 31 days. That's a weekend on the market, right? You have places like Longmont that it might be sitting on the market for 10 days. These are really great market conditions for sellers. And the reality of this is this is a better time to sell a house than it would be in most spring markets ever. And here we are around the holidays when there just isn't enough showings, right? I hear it all the time. Can't believe we're getting multiple offers, or the only one offer we got is full price, right? And they waived contingencies. So this is one of those markets that doesn't happen often. And when it does happen, it's so extreme. It really is going to push the price point of the entire Front Range in Colorado up. So this is happening across most of Colorado at this point. Now, if we look at it by price point, this is one thing that I think is really important to take away from Boulder County, and what's happening here is just the shift and the amount of money that is coming into the market. The luxury market has over 100 sales at $3+ million this year already. We've never seen anything like this before. Last year, we saw 36 sales year to date. This year we're at 103, and we're talking about almost a 200% increase at this point, just in that $3+ million market, and that's not changing anytime soon. You can really see just how well the luxury market has done this year. The real problem is those median to lower income and lower price point homes are just really suffering because there's not enough being built, and there's a lot of pressure being put on those homes to kind of increase in price over time with the amount of sales. As you can see, anything under about 600,000, really anything under 800,000 is really struggling to keep up with buyer demand. And the luxury market, not that it has a lot to offer as far as inventory wise, but it really is barely keeping up itself. So lots of turnover, not a lot of inventory at all price ranges. Luxury is just booming. Now, if we look at it from a month supply of inventory and a days on market perspective, you can really see here where that pinch is happening. Under 2 million, right? 2 million. It sounds like luxury, right? And it is in many cases, but there are so many people moving to Boulder in Boulder County, and so many people that are, millennial first-time homebuyers trying to get in this market. It's just this perfect storm with nothing to offer. So if you're selling a home, you're starting to see people move out of the state when they're selling. You're starting to see people retire and use that equity that they've built up to be able to do that. And it's really creating the point where even the luxury market is not a balanced market, right? We normally see 12, 18 months of inventory at 3+ million. Here we are in a seller's market at 3.4. So across all price ranges, and even the days on market are really low compared to what you would expect this time of year. Even though you do see days on market a little bit higher at 2, 3, 4 million, those price ranges are really just extremely different than what we've seen in the past. So this seller's market, it's not going anywhere, and it's not changing, and expect to continue into 2022. You better be prepared for this. So start using this data to prep your clients to understand what we're getting into. It could be even more extreme than it was in 2021. I don't see interest rates rising as fast as people seem to think, but they will start to trickle up. But that is just going to affect their buying power. So that might slow things down a little bit. But in all reality, the only limiting factor we have here is the supply of inventory on the marketplace. It's just a very popular, high demand place to live. So if you look here at the sold numbers, you can really see some places that have not had inventory and how that's affected them. Erie specifically, over the last 12 months, we're down 20%. Niwot's down 10% in sales. Longmont's down 8% in sales. I mean, these are numbers where we're really just capped at the amount of homes available. Places like Boulder that had a little bit more on the market, they're flourishing. Their sales are through the roof, and it's because there was a little bit more inventory to chew up on. You may not see that in 2022 because so many of these markets are so short on inventory, but the solds are looking incredible. We're almost exactly where we were last year with a completely different composition of sales. Now, if we go over to the average sales price, all we've seen is sales price increases skyrocket across the county. Boulder's looking at about 18% over the last 12 months, a trailing 12-month average of over 1 million. This is a huge number. It's way more than we've seen in the past. This is all units combined, attached, detached, the whole bit. You look at places like Louisville or Superior or, Erie or Longmont, right? We're talking 20+% in many cases. Longmont's showing about 18% as well. I would argue that probably is even higher than that. But you can really kind of see by the composition of sales. If you look at it by detached, you can really see which markets are booming in detached. So Niwot, there's not enough sales there to really articulate what's happening. That's why it's showing a number that might not make a lot of sense. We're still at 1.3 million average sales price in Niwot. I would expect that is going up rapidly like everything else around it because of all the pressure. But, a few sales a month don't always make the numbers look good. Now, if you look at all the rest of the markets, detached is accelerating much faster than the attached market, but we're talking 20-25% across all of Boulder County. Now you see Superior showing 30%. They're just building a different product type in Superior. It's a much different market than many of the others around it as far as the product that's being built, but it's higher end prices because of its proximity to Boulder and Denver. Now, if you look at the attached markets, you're seeing this 10-15-ish% increase in sales price. So nothing to sneeze at. People are not shying away from attached. It just doesn't have the upward pressure the detached market has because, most people buying into attached aren't necessarily coming from a big equity position when they purchase. So they don't necessarily have as much to put down, which is what's really bringing those bidding wars through the roof. So with all of those things in mind, we're kind of wrap up the whole picture for the year here. You can see that we're back on a normal season, more of a seasonal trend as far as our sold units are concerned. You can see that year to date, the sales are kind of all over the place in the county. Like I said, out in the county, we're not quite hitting buyer demand. We're really being stifled by the units available. City of Boulder had some units to sell, so their sales are through the roof, and we're just not quite meeting those sales we had last fall. So coming into December, expect that our sales are going to be down a little bit more. We just haven't seen enough inventory come on the market to keep pace with all of that demand. But what that means is going into January, you're going to see every unit that comes on the market sell very, very fast. I would expect right after the first that we are going to see a very, very strong market. And that spring market, if inventory will come up, it would be faster than before. Those buyers are going to stay active just like they have all fall. And we're really going to see people pushing and pushing and pushing to purchase homes and purchase more real estate. Just seeing a lot of cash come to the area. So it is going to be a tough one. This is a really good example. Let's look at detached first. If you look at the percentage list to sale price, so this means if somebody lists a home for $1 million, it's selling for $1,030,000. Now that seems like we're talking about bidding wars in November, right? I mean, this is not normally the time for that. If you look at this compared to years past, 2019, 2020, we're still having bidding wars in November where we didn't even get that high of a bidding war in the spring markets of the past couple of years. So this is an incredible opportunity, but what that means is it's going to be off to the races very fast in January, and expect that spring market is going to be a lot like last year. If you look at the attached market, same type of thing happening, just very, very strong sellers market, lots of bidding wars across all price ranges, and you're really just seeing how that's affecting the market. So if you have other questions, you want to look at other sub-market data, I'm always here to help. This is Anthony with Land Title, and I hope to catch you next time.